insurance has been a burning issue. And how can we ensure success in our businesses? There are certain issues that you would learn, good tricks of the trade of how people negotiate, how they go shopping for it, and how they are successful in providing that feedback to the insurance companies to get a better rate for you. That's what you learn here. Please allow me to introduce Kim Gore, who is going to be the panelist moderator on this panel. And Kim.
Thank you. Thank you so much. Well, we're honored to be here today. Each one of us, as we prepared, we're just thrilled to be able to be part of the panel this afternoon. So quickly, we're going to do an introduction so you know who you're hearing from today. I am Kim Gore. I'm the practice leader for Hub International Insurance, the hospitality division. Started my career in 1992, so that's 32 years. Am from a tourism-based economy in Myrtle Beach, South Carolina, so just naturally started my career in hotels and restaurants and golf courses and stayed there for 32 years. So an industry and a segment that I love. So I'll just go right down the line. You guys introduce yourself.
My name's Chris Jenkins. I'm the CEO of Novellis Insurance. We're a program-based group out of Dallas, Texas. We specialize in hospitality, so hotels, restaurants, real estate, and now it's dabbling into technology as all the investments go.
Good afternoon. My name is Tim Hoke, and I am a lawyer, and I hail from the Dallas-Fort Worth area, where I represent property owners in first-party property claims against their insurance companies. So I'm sort of wearing the black hat amongst the group here today.
Hey everyone, my name is Brett Johnson. I am the Vice President of Hospitality Insurance for USI Insurance Services. We're a top 5 national privately held broker in the United States with 200 offices. So I'm a Vice President in their hospitality practice. I've been on the insurance side for 12 years now. I was an underwriter for most of those years and then decided to move over to the brokerage side. So now I work there.
Thank you, gentlemen. All right, so today we're going to spend our time talking about the current insurance marketplace. We felt that was a great place to start. And then we're going to add in the claims view. We've got Tim, so we're definitely going to do that. We're going to talk about submissions best in class and why that matters. And then we definitely want to leave some time for solutions, some takeaways, and Q&A. But please do not hold your questions until the end. We would love to hear from you as we're going. This can be conversational. So we'll all be keeping our eye out for your hand. Just throw it up, and we want to hear your question. All right, so if we'll go ahead, and there's kind of our session today I just covered. We wanted to talk about why we are where we are today. So this is a great slide, and if you can read that bottom down there, it tells you that this is a map, and it shows the 28 separate billion-dollar weather and climate disasters that impacted the U.S. in 2023. So we all know weather and climate has been changing and the impacts of that. So I'm just going to throw it to the panel and ask them, why are we in the current market conditions we are? Chris, you want to start us? We'll just go straight down this time.
Yeah, as many of you know, COVID did great things for us. We started working from home, moving around, but also there was a great influx, as you guys saw, where people started moving into areas that necessarily wasn't popular or a lot of people lived in. Florida, us being in it, Miami is a booming, bustling area. But if you think about that, we just incorporated more people into an area, so therefore more losses can happen when disaster strikes. Granted, you look at Florida, we don't have too many incidences. However, wind has been a driving factor all across the U.S. As you can see, a lot of those are storm-related. We're having hail incidences that are far-reaching than they've ever been due to increased values of property, increased values of construction, and at the same time, people being in areas that they were not necessarily before.
Well, do you want my jury argument? My jury argument is that insurance companies are greedy and that they don't want to pay claims. No, but seriously, there have been an explosion of weather catastrophic weather events, and it has really put a lot of downward pressure on the carriers. And you just see it every day. I mean, the claims, and I don't know exact numbers, but there is a multitude of claims now because honestly, a lot of it is the consumer the hotel operator, the hotel owner, the property owner is more sophisticated with regard to their claims as well. So there's a lot of things at play here, but yeah, for sure, weather and climate disasters play a huge role in it.
Yeah, I think when you look at the map, one thing to note is that about 15 years ago, that number was 8, and then last year it was 28. And so you're seeing obviously more weather, more powerful storms are causing more damage. The other thing you've got going right now is obviously inflation. So what you're seeing is that the cost of reconstruction has gone up dramatically. So where carriers were charging you $160 a square foot to rebuild your property, that number's now gone up to $200 a square foot. And so all of a sudden your premiums go up along with the cost of construction. So that's obviously been a major issue. Unfortunately, news isn't quite great. I mean, there's a good and a bad here as well. One thing you have coming up to be aware of is this upcoming year, we have an incident called El Nino, La Nina. So normally you have an El Nino season or a La Nina season. This year, unfortunately, we have a La Nina immediately following an El Nino. And what that means is that they're anticipating a pretty bad hurricane season this year. So just be aware of that. I will say on the good side, however, we also found that this year carriers, this past year in 2023, carriers actually made a profit. Normally, they only make money 3 out of every 10 years. So because you're coming into a year where they made some money, we are starting to see the market kind of calm down. So there is a light at the end of the tunnel. We just have to be aware of kind of what's going on.
Thank you, guys. And on that claims kind of conversation, we thought we'd start our insurance conversation on that as well. So when you're purchasing your policy, you're making that submission and application, the view is the end, right? When you go to use that, when you need that, when coverage is triggered by your policy, we can learn a lot of lessons there. So Tim, I'm going to ask you, from your legal and claims view and knowing how policies respond, will you share with us some major issues or some items that you've seen over your career?
Sure, you bet. So let me ask the group a question. How many of you have read your policy? Okay, well, there
There's
we
a
go.
few hands,
That's
a
great,
couple,
see?
yeah.
Very few. And so when you come to me with a claim, as Kim said, it's on the back end. And so, you know, you're desperately trying to rifle through it and find out, are you covered? And if so, how much are you covered for? So let me ask you another question. How much of you understand your deductible on a property claim? I'm not talking about casualty, just on a property claim. How many of y'all know what your deductible is? Okay. Are they percentage deductibles? For wind and hail, right. I'm sorry, for wind and hail, okay. So a lot of people come to me and I call them back and I say, look, I've got your policy here. You've got a $240,000 deductible. And they look at me and they say, well, that can't be. I said, well, it's a percentage deductible of the total insured value of your property. And so if your property is worth $12 million and you've insured it for $12 million and you've got a 2% deductible and you've got a $240,000 deductible, that is a real eye-opener for people. So we can talk later about deductible buybacks when we talk about how to remedy some of these issues. How many of you all have hotel properties that have EIFS or synthetic stucco on the exterior? Mm-hmm. Okay, do you? Most of that. That's what I think, okay. And the synthetic stucco is usually more than 5% or more than 10% of the exterior. Is that fair to say? I would say, probably so. So I'm seeing policies now where you don't have any coverage for wind and hail if you've got more than 5 or 10% EIFS. That's a tough realization to come to. And then you've got issues with regard to cosmetic endorsement. Cosmetic endorsements are where the wind and or hail only cause a cosmetic mark as opposed to cause cosmetic damage as opposed to what they call functional damage. So that's a real issue. And then you've got problems, you've got other issues. I don't want to take too much time, but you've got other things in your policy where you've got arbitration clauses. I've got a case now where it's a homeowners association in Dallas, in Rockwall, and we have a wind and hail claim, and we are arbitrating the case in the Southern District of New York. Makes no sense, but there's no right to trial by jury, and we've got a former judge in New York who's going to decide the issues. Hopefully favorably, but there are a lot of choice of law issues in your policy that you may not be aware of. And there are mandatory appraisal and arbitration issues in there that you may not be aware of as well. So my point is, don't allow the claims process to be the first time that you read your policy and understand it. So
the policy said that it had to be arbitrated in the Southern District of New York?
Yes.
And that was it?
Well, luckily, so here's the good news, although it comes too late for my client on this. The Texas legislature passed a bill that said you can't do that anymore. You can't require a Texas resident or a Texas property owner to arbitrate in a different state. So we got lucky there, but I don't know that the rest of the country is as progressive as Texas legislature is on that.
Can they still be required to have binding arbitration?
Oh, yeah, absolutely. Yeah, binding arbitration there's quite a bit of that.
Oh, yeah.
Yeah.
Yep. Thank you. And staying on that kind of claims perspective and hearing some of those items, Brett, I'm going to ask you, of those issues presented, can you connect some of those back to underwriting, back to the start of the process where we're procuring our insurance?
Yeah, so a couple of the things that I wanted to pick up on, as Tim mentioned, when we talk about our deductible options, most of you said, obviously, you have percentage deductibles for your wind and hail. What we're seeing in the market is not only are our rates going up from our carriers, but they're pushing more of that risk onto you, the hotelier. So you're going from your flat $10,000 deductible to these percentage deductibles. And what that really leads to is that you need to be able to have a conversation with your broker about how much risk you can afford to take on. One of the things Tim had mentioned were deductible buybacks. What a deductible buyback is basically if you have, say, a 5% deductible, you can actually go out to another company and pay a premium in order for them to take on a percentage of that deductible. So you can buy it back from 5% to 2%, 1%, 10,000. You can basically finance taking on less risk. On the other hand, if you're willing to take on more risk and able to, you can actually lower your premiums by taking on additional risk. You can do this through captive options, by taking on higher deductibles. Really what it comes down to is having a conversation to understand what the cost benefit is to each option on how much risk you take, and then figuring out what's right for you, whether it's taking on more risk in order to get a lower premium or whether you're taking on less risk to pay less out during a claim. So really that would be how I would kind of center that conversation. The other thing that he had mentioned that I wanted to kind of hype on is talking about how underwriters are actually underwriting your property policies. So I put two pictures up here and I just want a show of hands. These are two properties that I've taken a look at. I write the one on the left and the one on the right is one that I've taken a look at. They're both Hampton Inns. By show of hands, who thinks that the one on the left is the better property? And who thinks that the one on the right is the better property? A few hands, everyone went for the right. So interestingly enough, the one on the left is the better property. And the reason I say that is, so the property on the left is a client that I write. They're in southern Louisiana. So tough area to write property, but this building has concrete floors, concrete pillars, red iron framing, has a brand new PVC roof, has additional drainage, and has storm windows. The one on the right is one that I took a look at in North Georgia. It's a basic wood frame, wood floor, bitumen roof, nothing special to it. But when you look at them, they look exactly the same because obviously our franchisees have certain ways that they want the properties to look. From an underwriting perspective, so much of what underwriters are doing these days they're driven by data. And so it used to be that you would put an application and losses and you would put everything on their desk and they would take a look at your property and develop an actual price. And what underwriters are doing now is basically they're entering data into a computer and running it through a model and the computer is spitting out a price and terms. And so what happened in this case is the underwriter, what we found was that they were actually, because they didn't know all of these what we call secondary characteristics, the windows, the framing, the floors, they were looking at that hotel, they looked at the picture of it and said, well, that's a basic Hampton Inn. And they rated it as frame construction with no additional details, and it spit out a really high price with bad terms. And so a lot of what we focus on and that we'll talk about a little bit later is how do you frame this and how do you get all of those characteristics to your underwriter so that they're putting in good data into the system to get a good price and good terms out. But I just kind of wanted to provide a little bit of an example of exactly how that underwriting process works these days.
Thank you, Brett. That's great because you look at those and you don't see much difference, but there's a ton of difference, and that's where that insurance conversation goes. Oh, I see a hand. Yes, sir.
Is there some sort of like standard set list or even literature showing that what underwriters are looking at whenever they're looking at a piece of property? Because I do find that it seems like when you're coming up on renewal, the line's always changing. Like It's basically what the brokers tell you, and then you're kind of between you're in a hard spot or a tough spot because time is against you, and the insurance company have all the leverage. So what do you have to do? You basically have to kind of take it on the chin. But if somehow you knew all these factors and thresholds beforehand, then you could put yourself in a better position.
No, you're completely right. So when I take a look at a property, we typically start 180 days out. So we'll start having conversations with carriers 6 months out. Carriers, you'll have your typical application, but they'll have supplemental applications. A lot of times you get those requests where, hey, here's the standard questions, but the carrier wants to know A and B and C and D. So we'll ask those as well. But part of it is just being knowledgeable, working with brokers, honestly, who are in the space, who focus on what you do, because they're going to have those relationships with those carriers that are going to know exactly what those factors are. It used to be that you could go and work with your local broker and they could fill out a standard application and take it to programs and carriers and folks who focus in the space. But what we found is that over the past 4 or 5 years, a lot of those programs don't exist anymore. And so really what it comes down to is making sure that you're working with someone who knows those finite details. So part of that just comes down to selecting who you're working with. But I would highly recommend starting your insurance process 6 months out instead of the typical 60 or 90 days.
Chris, you want to add to that? And
Yeah,
then
I was
we've
going to
got
add,
another.
so standard insurance practices is called COPE, construction, occupation, protection, exposure. So what is the building made of? Top down, every floor. Occupation, what's in it? So they're looking at what type of brand it is. And unfortunately, the insurance carriers, just like as you heard from a lot of markets, financing and so forth, they're being very selective of who they're working with. They are judging based on your investment. Protection, what type of safety features are throughout this hotel? Commonly, that's skipped over. We can find out if it's sprinklered, but now you're getting questions from underwriters. What is your schematics on your water system? So there is different types of water systems throughout the state. Many states have standard. Texas has NFP 13R, which is residential. So it's decided to protect the lives instead of protect the building. So what that means is we're going to burn down that whole building when that fire starts, but we're going to make sure we can get people out. Unfortunately, to the insurance carrier, when you're talking property, that's the opposite of what they're trying to do. And then your exposure, that's your sales. What is your building values? Understanding the limits. What is the replacement cost? A lot of individuals are looking at what is, hey, how much does it cost me per key? But what is it actually to replace this building? And it could mean two different things. And you see a lot of people from the buying side, the hotelier, not understand what they're looking at and what is replacement cost. But we'll dive a little bit more into that pricing point into the next slide.
I think we have a question here, and then we'll come over here. Yes, sir.
So who's actually running, let's say, Crime Score or Marshall and Swift Report? You as a broker or the carrier?
The
Carriers.
carrier is requiring those. They're actually running it, and there's a common company that's used through a lot of carriers called Prometrics, which is coming back on what has been done on that building. So here's a case in point. If you bought an existing property that was built maybe 10 years ago, they could have ran a Prometrics report, which is a safety evaluation, something you may use to sell your property or evaluate when you did your property as, valuations and so forth. You may have changed a lot of stuff, updated your roof, updated your sprinkler system, updated individual rooms, safety features, smoke detectors, so forth. Even changing out something standard from a old style key to a new style fob. There's stuff like that you need to relay, and that's running from your carriers, and so we have to fight that on a regular basis.
Yeah, I'll add on to that. The crime scores are something relatively new, and from the broker standpoint, we wanted to understand where are these coming from, like what data is it, and bad data in, bad data out, right? So there's some older things and older definitions, and we had a particular client that happened to be adjacent to a city beach access, and everything that happened in that parking went to their crime score, which, wasn't fair. So we're on the side of figuring that out. And as underwriters ask us, back to all what you've heard, having that conversation, understanding exactly what's going on to bring them back a better story. Because if they just take that data, then they're going to hold it against you in the worst way. So that's a great question, because that's something we're definitely seeing in the underwriting.
So basically, it's within a certain vicinity.
Yes.
Basically, it's within a certain vicinity, whether there's rape, burglary,
Correct.
Gunshots. So all that is considered into the crime score
yeah.
when they're pulling it.
Yeah.
I'm
And it's
sorry,
like somebody had their
I'm
wallet.
asking these questions for.
Yes,
Yeah.
somebody had their wallet stolen out of their car. That is a theft, a larceny, right? And they left their car unlocked at the beach access, right? But the crime scores don't know that. They don't know the story. They just know the data that gets put in by the code and like you said, the vicinity. Yep.
When we build brand new hotels ground up, we know our COPE data pretty well, right? Because we work with our GC, so we know all the materials. But when we're acquiring a hotel, right, what are some things we can do during due diligence, right, to gather a lot of this COPE info? Because at that point, we only know the basics, like year of the building, we might know what the exterior is, but like when it comes to the wiring, plumbing, all that stuff, right, that's where we find our challenge.
So, you don't mind, when you're buying a property, everyone's doing their due diligence. You have forensic accounting going through the books, making sure that you're buying existing, that you're not getting hoodwinked. You should be doing the same thing as far as exterior, making sure on the roof. They're going to be pretty due diligent. On your own, where it's surprising enough, we'll find people that don't even know the square footage. I had someone tell me, hey, it's 45,000 square feet. What is ever a perfect number like that? Whereas you'll be surprised when you pay your property taxes, they're collecting that information. It's sitting in the city or the county. Something that I do all the time is I'll go into the county appraiser, and the county appraiser has all your information there. It will go by, it'll tell me when it was built. It'll tell me some counties will have the actual water features of the sprinkler system, the type of pressure testings and so forth. You'll have your square footage by floor. It'll tell you your breakout if your pool, what's your pool building, and then it'll tell you your ground up and so forth, your canopy, what is the square footage of your parking lot. And then it'll even, you'll notice it might have a dollar amount from 5 years ago to, it'll say an improvement, maybe $1 million. And that'll give you a question, hey, what'd you do for $1 million that the city wants you to pay on? That's a good question on your end, yeah.
I would also add, when you're talking about acquiring a property, one thing that you can always ask for is what we call a statement of values. Every insurance broker has one on a property, and that's going to list out that COPE data. So the seller can always acquire that from their insurance broker, and then you can also run that by your own insurance broker to fill in any gaps that it may have. But that is one piece of information you can request that they should be able to pretty easily provide that has a lot of that data.
I just want to share what we do when we acquire hotels is we go and get the permits, the drawings. They have very detailed specifications of what they are supposed to use when the building was constructed. Or if that is not available, we hire a building inspector, and they have knowledge of what they need to look for and specify in their report, professional written report. That becomes your guide and tool.
You mentioned
point.
building. I want to say something with that is, if you're in a, we call them domestic market standard carriers, if you're in a standard carrier, you're going to be paying close to 30 to 40% less than what an E&S market is. E&S is pushed out to mainly, it used to be if you're coastal for hurricanes and so forth. In the state of Texas, we can comment all on this, certain states have it, it's NFP 13R, NFP 13, the design of the flow of the water. If you're on a 13R, we're getting carriers to ask that question. That's a split of maybe $30,000 to $40,000 on your insurance premium right there. And if you factor that over time, it's going to, you saying, hey, I'm going to save $150,000, $250,000 up front by going with this different water flow system, over time it's going to pay dividends for the company.
All right, we get all the questions? Well, we've heard coastal property several times. We're in Florida, right? So we have to add that to our conversation. And Chris, I think you were going to help us look here at some of the areas that we can discuss being proactive, where we have those coastal property exposures.
Yeah, so this used to be just straightforward coastal, but now we're getting inland to a lot of places. I mean, Florida is seen almost like an island to the insurance market. Texas, it's actually worse to be in Dallas than it is in Houston almost. We're getting more claims come out of the Dallas area. I mean, just the other day we had gorilla hail, if you guys ever heard that term. It's more than a baseball-sized hail coming down. Talk about lose your whole roof in a second. Your car looks like it got hit by Mike Tyson. But so when you're talking about your coastal locations or any of your locations, if you have more than one or you have multiple properties or even a single property, understanding where you're at, understanding the parametrics of what's going on with the insurance market. So what is your profile, internal and external? How does my property look on the inside? Did I remodel it? How does my property look on the outside? And then understanding what is the factor of your locations. So I had someone that was down in the Houston area that said, oh yeah, well, we're inland, we never have a problem. You can look up data back to the 1800s of wind-driven patterns. And you can see where these storms came in, you can see what the amount it does. And then you can always YouTube, you can see fun videos that say, hey, what does 100-mile-an-hour wind do to my building? What does 80-mile-an-hour do? And so forth. So more of this burden now is being pushed back to you as individuals on what's your risk appetite. We always hear about deductibles, we always hear about what is the end game. But really, how could you structure your insurance policy? You guys were all forced into realizing the difference of debt and how you can finance a hotel. Usually you would have went SBA, but now the rates may be too high, may have a lot of contingent problems. Or you can get private financing if I put down 30% versus 20% or 40% versus 20%. How does that factor? Same thing is going into insurance. So if your building is valued at $12 million, do I take on the back end of the risk and maybe insure the first 7 and take on 5 behind it? Or do I take in more in the front? There's been claims that go through that what you're seeing, the reason why these 2%, 3%, 5% wind hail are going on your policy is because people are treating insurance as, hey, if I'm driving down the road and I pop my tire, should I get all 4 new tires? No, you should fix that one tire. And what's going on is you're getting roofs be replaced at $400,000, $500,000 when it might just be a cosmetic that might be a $25,000 to $50,000 fix. And so they're really forcing you from that standpoint, but the brokers are failing to educate you. And so what's going on is I get people that ask, well, how do these big people do it? My background was large property across the United States. So when you look at what these people do, they spread out their risk. Do I need to insure that full value? So what is my maximum loss versus a probable loss? What that means is if I have 5 properties, am I going to lose all 5 properties? Or I'm going to lose 1 property? Could I only insure the value of 1 and spread it across 5? Absolutely. You just need to check your loan covenants, make sure that it's there. But you could really buy down your insurance that covers across all your properties. And then what this really is, it goes back to this, is what is the long-term strategy of your property or your portfolio? You want to control cost. So instead of just coming up to your insurance renewal today and dealing with a 20%, 30% increase, how can I control it to where that is leveled out over the next 3 to 5 years? Instead of just reacting and seeing how your P&L takes it.
And that actually takes us right into what we kind of want to talk about next. Any questions before we make sure I didn't miss anyone?
Regarding the insurance, I'm talking about some properties has no loan at all. It is everything paid off, right?
Yep.
So in that situation, owner needs excellent advice of the smart professional people, because when there is no loan, there is no requirement from any company or anybody. We are our own owner of this property, right? So only liability. Franchisors are asking only for the liability.
Yep.
That is covered. But regarding the property, which insurance is needed, what is not needed, so how we can get that help?
I can take you a step further, and you get to create it. So instead of saying no property or yes property, and the insurance tells you what is replacement cost, which right now is running at $165 per square foot, you should be looking at what am I going to do with this property? So if you have a Motel 6 from the 1980s, will I build that Motel 6 again? You may say, hey, there's not an IHG around here. I want to build an IHG. So what is your demolition cost and what is your covenants to get into a loan? So if it's a $12 million build of a new property that you have your eye on and a tornado hits your building and you're just lucky. And from the standard insurance market, they're going to say, hey, that's a $7 million building. You can pick and say, I want to cover it at 2 because that will get the demolition gone and that will give me the amount to build my next property.
That's the point. And another thing is anytime I think there are some loop points that in a hurricane, certain kind of hurricanes are covered, certain are not covered. Owners don't know, and they think that, oh, my property is completely covered. And when the actual money insurance company has to pay at that time, this kind of excuses start. And this is a shocking news for the owners.
Yeah.
So what kind of, that is why we need the expert people to advise us to take, before we take the insurance with our insurance company, we need the advice that this should not
Yeah.
be.
Tim's
So-
first question about reading the policy, right? But reading it along with your
But
broker.
owners have no time to read the
That's
40
right.
pages.
Yeah.
Yeah.
For your broker
And even
to
though we read, we understand 50%.
Give us 30
we are
minutes,
always
right?
in a rush. Another thing is that the biggest problem owners are facing is right now, most of the insurance agent crooks, they come at the last moment. And owners
The
don't
timing,
know.
yes.
And another thing is they block it. Suppose, I give you the example of my friend that he has only 15 days left for his insurance to renew. Now his agent has blocked or something. If he goes to other insurance agent, still they cannot get the access and other things. So in this kind of critical situation, if we have the expert people who can guide us and find out the way how in the favor of the owner that is needed, and we don't mind to pay good money for that kind of
Brett,
golden
you wanna take
advice.
that? We're going to let
Yeah,
Brett take that one.
I was going
yeah.
to say one of the things, because I ran through this with a client this morning. When it comes to blocking the market, part of it, especially if you're
Blocking the market.
if you're a coastal operator, the ability to access markets, it comes down to being able to, I would say it's more down to picking the right broker than it is accessing the number of markets. Because part of what we're talking about is it about accessing more markets or getting the best opportunity you can from those markets? So the example I have is the folks I were talking to today, they have properties in southern Louisiana. Their broker sent it out to 30 different markets. They went to every single market that was out there. And I mean, that's what you would ask of a broker. You want to know where everyone stands. But more importantly is making sure that you're working with the right broker who understands how to approach those markets so that you know that they're working to get the best terms and coverages available. And so I think it's more of a question of how am I approaching the market? And like you said, it's a perfect segue into what we're going to be talking about, because it's more about how you're approaching the market than how many markets you're approaching. And when you say a broker's blocking markets, it's not necessarily that they're always blocking markets. It's just that they're approaching, because the markets are so tight, they're approaching everybody to see what terms that they can get. But what we need to be focusing on is how we're approaching those markets to get the best terms we can.
Yeah, but we definitely need the owner's representative to talk with the insurance company.
Absolutely. No, and I would
So
encourage
out of
you.
you three guys, you guys are working in that area or not?
Yeah, we are. And I would encourage you as an owner, if your broker is not getting you time to talk to the underwriter, you need to be asking for that. I mean, most of the clients that I work with, I'm trying to get them in front of the underwriter so that they can tell their story and walk them through the property and show them how they're involved. Those things help. So
Yeah.
I would highly encourage you to have that conversation.
All right, thank you very much.
Interview your broker like you would interview your accountant.
Yeah, but sometimes, very difficult, and they are answering such a weird answer sometimes. We cannot understand sometimes. And another thing is to have a competitor with that insurance agent is also sometimes not easy to find it, Yeah. Yeah. All right. Thank you.
Thank you. All right, I don't see any others. So you saw there on that last slide where we talked about best in class, kind of a quick definition. So when we're working with underwriters, and that's why it was such a perfect question and segue, all of those details, and you've heard in everybody's answers the things that make a difference, the things that matter in the rating. So I'm just going to ask you guys to all make a comment on around best in class. What are you finding underwriters are listening to, and what's making a difference when a property is put into the insurance marketplace?
I would say we've all had claims. Insurance is there for claims. If you don't have claims, it's going to happen eventually. And this first bullet touches on both of it. So what have you done to your existing building? But further, what is the story behind what have you done to prevent an incident? And so if you had a claim, that's a good story to have. You can say, hey, this is what happened. This is how we prevented it. So Texas, actually a lot of the country, we had freeze problems. And you saw where pipes burst and everything. You would think you would be uninsurable for a lot of it. But the carriers want to understand, hey, how do you go forward and prevent this from happening? Because sometimes we don't know. We don't anticipate that we're going to have something just occur to our property. But how do we, one, learn from it and protect it so it won't happen again?
Yeah, there is nothing better for me than to go out and visit a client's property and have him bring me maintenance records and photos that establish a baseline of what the condition of the property was prior to the loss. I would encourage all of you to be very proactive in that regard. Make sure you have a very regular maintenance schedule. I had a deposition of a gentleman who was sitting in and said, well, how often have you inspected your own roof? And he said, well, I don't worry about what's on the roof. I worry about what's under the roof. Well, you know, you need to take the time to go up there and understand the condition of your property, or at least send somebody up there. One of the biggest misconceptions that I find is property owners believe that when they go through the process of applying for insurance, that there's an underwriting process that goes along with it. Well, that's not the case. I mean, it's up to you. It's incumbent upon you to present that information and dress it up as best you can for the broker so he can present it to the market, because they don't have a duty. This is crazy, but they don't have a duty to underwrite your property. They'll do their own underwriting. But in terms of, I don't know how many times I've told people, well, look, this may be old hail, or this may be an old claim, this may be old damage. And they said, well, they inspected my property before they wrote the policy. And I said, no, they didn't. And they said, well, if they didn't, did they have a duty to do so? And I tell them, no, they didn't have a duty to come out and look at your property. And most people are kind of blown away by that. They think, well, wait a minute. Then why did they insure? They underwrote the property based largely on the information you gave them. So it's incumbent upon you to really be active, very proactive in that regard. Send them maintenance records, send them photographs, and dress it up as best you can. So.
Yeah, I think that's a perfect segue into this, where what we're talking about best in class, one of the things I want to talk about is how you're being presented to the market as best in class. And so what you see on the left is the history of what 95% of the brokers out there do. And as an underwriter, this is typically what I would see, is that a broker would come out, they're going to fill out the standard application. We call it an accord form. It's a standard insurance application. They're also going to send in your loss history. Every underwriter has to see your loss history to see how you performed. And then typically they're going to send in narratives on, hey, have I had a large claim? What happened? And you'll be surprised at how poor some of those narratives are. I had one where the client had a $10 million claim because two of their properties got hit by Hurricane Ida. And when they sent the narrative in on that claim, $10 million worth of damage, what they said was damage from Hurricane Ida. It's all that it said. That's all that they communicated to the market. And that's what your standard submission looks like. And what happens is your broker puts that together, and then they send it out to all of those markets. Like when you mentioned you were talking about blocking the market, it's not necessarily blocking the market, but they're just going out to every market that they have access to figure out what terms that they can get. So really, in order to be a best-in-class submission, when we look at a submission, when we send things out to market, we want to basically do all of the underwriting ahead of time for that underwriter. What we want to put on their desk is basically the work that they should be doing. We call it pre-underwriting, but really, along with all of that information we've already talked about, you can see the list on the right. These are all things that we submit to the market. So the first thing is a narrative. We want to tell the story right up front of who you are, how you're involved, why you're a good risk. We want to put that so the first thing that the underwriter sees is why they should write you. We're also going to talk about those secondary property characteristics that, hey, do you have the storm windows? Do you have drainage systems? Do you have better roofing? Do you have better wiring? What are those secondary characteristics and that data that they can input to get a better result? The other thing that we do, we take a look at property analytics. So underwriters, when they're looking at your property, the number one thing that they're doing is running what they call a catastrophe model. And basically, it's just a computer-generated system that says, hey, here's the information that comes in on these properties, how much they're worth, where they're located, and the system tells them, well, this is the likelihood of what type of damage it's going to take in the course of 100 years, 250 years, 500 years. As a broker, we actually run that ahead of time and provide that to them to show them what our analysis shows and tell them to defend it. We do the same thing. We talked about crime scoring. We do that. We'll take a look at floodplain. You're going to start seeing flood insurance become an issue, so you're going to want to do an analysis there. And then we had also talked about those preventative claim actions. I think that's perfect. If you had a claim, you want to tell the story of what you've done to remedy that so it's not going to happen again. My client who took that $10 million claim, we talked about how they put in not just a new roof, but brand new drainage systems. And then we sent the engineering report that showed the water flow, how it was going to get away from the building. It's a perfect explanation as to how that type of claim isn't going to happen again. So really, at the end of all of this, what we're really talking about is making sure that your broker is doing the job of putting the most quality submission on that desk so that when that underwriter takes a look at your property, it's a story of why they should write it, not a story of why they shouldn't write it.
Thank you. All right, so we want to get to some actionable steps here. You've heard a lot of them, but we want to make sure that we're integrating all the questions as well. We're at about 5 minutes left. So if you have a question, make sure you're jumping in and asking it. So here we go.
How much impact have you seen from websites such as TripAdvisor and Google reviews when you see negative reviews of hotels? How does that impact on the underwriting?
It does, yeah.
Yeah, I would say we would get responses back. we try to offset it with other reviews because the problem is with reviews, it's mostly 80% negative instead of positive. I mean, you can bribe someone a free night and it's hard to pull their arm to get them to do the review. But the truth is we try to push back on it. The big one that would come through would be bugs. So if you have photos of any cockroaches or bugs in the bed, it would help to acknowledge that yourself, but then provide how that was taken care of. We're getting, the most common one now is certificates of completion for bug service contractors. And so, but as far as Google reviews, they're not diving too much into it, like, hey, someone stole something, theft, or anything like that. We're in the business, they're in the business. They know there's a lot of fraud out there from clients that are trying to just get free stuff. But the only one that I'd hear most that the carriers would come back on would be bugs.
I will say one thing, when I was underwriting a couple years ago with underwriting hotels, they will take a look at Google reviews, and there are some companies that do have hard lines based on what that rating is on Google. So, I mean, when we started 3 or 4 years ago, it was a 3.5. So if you were a standard hotel and you had less than a 3.5 on Google, it was a straight decline. Actually, 2 years ago, they increased that and they said it had to be a 4.0. And they were just looking at it from an analytical data standpoint. The nice thing is, knowing that that's a data point that they're using, you can actually push back on that. So as long as you know that that's the guideline, and that's why it's so important from a broker standpoint to understand what those underwriting guidelines are, because you can push back on those. You can look at how old are the reviews, when have they been, because a lot of times, again, the underwriter's just looking at that data point and saying, hey, it's not a 4.0, it's off my desk. They're trying to move on to something else. As a broker, if you know that that's a data point, we're telling that story ahead of time. Hey, Google reviews a 3.8, 80% of these are 4 years or older, but it's still being taken into account of, and we'll give them the story to help them get we'll call it getting an exception, but they do look at them.
And I think we've hit on most of these takeaways, but why don't you guys each take one point that you want everybody to kind of leave with? It can be on here, or maybe something that's come up within our questions. But I hope that you've heard that you need to have a broker that you can be transparent with, that you can take some time if you have to allocate somebody else to do the time. But it takes time in your very busy schedule. But the P&L is showing, right? As insurance creeps up, it's getting more of your attention. But we're going to do those. But I see a hand over here, and then I want everybody to do one takeaway.
So I have a question. What happens when a broker says he wrote a policy and the policy was never returned and give us the certificate, like, you guys give a certificate to a bank that this property is insured and your bank is covered. Like we have leased our property to someone and the broker gave me a certificate every time to my bank that this property is covered for the building and everything. And it was never covered.
Tim, you want to take that one?
We have a lawyer up here who might be able to answer that.
That should not happen, but we do have a lawyer.
You better check his errors and omissions, I guess. That's
Yeah.
falling under something different, but you better ask him if he's got an errors and your broker, if he's got an errors and omissions policy, because if he's certified or sent a certificate of insurance to your lender, yeah.
Yeah.
It happened in California.
Yeah, and I would report it to the California Department of Insurance.
Yeah.
Yeah, but they told me that you never lost anything, so it's nothing, you cannot do anything.
Okay, so you didn't have a pending claim. You just, okay,
I think it was a fraud for 4 years.
Yeah.
okay. So you paid premiums for something you didn't have.
Get an attorney
claw
and sue
back.
them.
Yeah.
Yeah.
Yeah, Department of Insurance, yeah, that is absolutely not the process in insurance, so that is an outlier and
And the second incident happened was, a broker gave us something in writing that will be, this much percentage will be the charge for workman comp insurance. And in reality, they charge something different. And when we are trying to fight with them, now no one gave any damn to us.
Yeah, and I think it goes back to choosing the right partner. That's one of the things on here, and that's hard to do. You've all said that, right? You're having those conversations. Your insurance professional is supposed to be your expert. You're supposed to be able to believe in them. But having those early meetings, I think you said those early meetings, meeting off cycle of insurance, I know that sounds horrible, right? You don't want to meet with your insurance agent again, but it's very important that you can build into that, have somebody else take a look at it. There's a number of things. Those are unique situations, and I'm sorry that you experienced both of those, but that's not the norm, I would say, in the world that we work in.
Yeah, and I'll add to that is, evaluating the true risk of your property. Unfortunately, how many of you are 4/1 effective date?
4-1.
So I don't know if you know this, but you are sharing your insurance with hundreds of other hotels. There's a group called JKL CRC, Southern Hospitality Underwriters, ran by Vishal Patel. They only buy $200 million of coverage, and they lump everyone together. So when you have your losses, you might be 0 losses, but you don't understand you're actually sharing that with other groups. And so when they have their losses in that portfolio, underwriters are underwriting the performance of the whole entire portfolio.
So what, excuse me, you say 4/1?
Yeah, April 1st.
Okay, effective date.
Yep.
Because my insurance, this April 16 or 15 or 18.
If you got, so the cycle runs 4/1 to 4/1, but then they have attachment points at 6-month intervals. Or if you got moved off date, it could go into that. The insurance market is shrinking in hotel space, especially for older properties and off-branded properties. And this is a common group that you would be with. You would move into that.
So we can connect with them or?
It's understanding that it's not just your property, it's understanding that you're with a group of people. And so you might be like, why is my insurance going up 20 or 30%? If you're in a group like that, it's understanding, your strategy is tied to the hip of many other companies.
Are you saying it's a master policy?
Yes.
So they
It's
prorate it if you join in another month?
Yes. And I'll just say a case in point is we moved a person that was off of that group, that they were unaware of that situation, moved them into one of those carriers that were listed in that slip that insure that whole group, and they offered him better terms because his performance is better than that whole group.
All right, Brett, what's your takeaway?
Yeah, one thing I would say, we've talked about what it takes to be considered best in class. The thing that I think for y'all that is probably really important is that when it comes to your data, when it comes to the information that's necessary in order to submit your property out to the market, you really need to control that yourself. If you're relying on your broker to control, hey, the statement of values, the COPE, the applications, all of that process, in case in point where we've heard where if you have a bad broker, but they control that information, then the question becomes, well, how do I get away from them? Because if you're going to need your loss history, if you're going to need your applications, and you're relying on them, you're kind of stuck. So what I would recommend is just on a once-a-year basis, make sure that you have all of your updated information. Request your loss runs from your broker, and they have to provide those to you. It's your data. And if they push back or they say it's going to take too long, just push them back on that. But really, if you have an annual process to make sure that you're controlling and updating your information, you have that all the time, it puts the pressure back on your broker because they know that you have the ability to take it to another broker, or it gives you the flexibility to go to another broker who has the capability to get you the best terms that are available. So just really controlling your own data is so important.
And we are over time, so please take the survey. Ho is asking every session for participants to do that. So if you'll use the QR code here and do that, we will be glad to hang out outside. Because if there was a question or something more specific that you didn't get to, we're glad to hang out there, but we want to free up the space for the next session. So please take a moment and do the survey of the session. And then I've got one more slide that's going to have some information on us in case you want that as well. So I'm going to give you a minute, get your survey done. See a couple more cameras. Everybody got it?
Can you guys address, just for the room, that it's getting really difficult out there for owners that have exterior corridor properties?
Oh, yes.
That most carriers do not want to even touch them.
And excess casualty too.
Yes, yes.
If you guys can address that, that'd be nice.
Well, is it okay? Are we okay to take that question, or do we need to do it? Okay, we can take it. Go ahead.
Yeah, unfortunately, as of
Okay.
this morning, it's going to get worse. Liberty Mutual is officially pulled out of hotels. They were doing a lot of them that were still clean. That was your saving grace on the domestic market. Now, you are very reminded of telling the story. That needs to go in there. You need to talk about how are you preventing slip and falls? How do you have cameras to prevent outside incidences? It's same with the pools. If you remember, there's always questions that they're going to ask you about the pool, diving boards, and so forth. You need to provide over and beyond. And just instead of saying it's an exterior corridor, how am I preventing, provide contracts of if there is outside services that are making sure the sidewalks and so forth are taken care of, especially if you're a northern property where ice and snow could happen. And then with that factor also, when you're talking about the excess market, they're now more lenient I should say with exterior corridor property, it's more of the extended stay, because that's when we're inviting people, not like your home two suites or your weekly, but it's more if you're offering monthly rates or so forth. It's getting really hard from that standpoint, because that's where a lot of abuse and molestation came from, kidnap and ransom, a lot of interesting stuff that came of those style properties.
Yeah, I was going to say, as a former underwriter for excess casualty, the biggest thing to take a look at there is not just how much limit you can buy, but are you getting the same coverages that are following from your underlying policy? So we're seeing a lot more, we'll provide you $5 million or $10 million, but we're going to exclude assault and battery, abuse and molestation, legionnaires, all of those things that are truly the drivers of high claims. And so really what it comes down to is making sure that you're doing a full review of the policy to make sure that there are none of those additional exclusions. And then, like we've talked about with property and everything else, when it comes to the underwriting process, it's giving the underwriter as much data as you can to have them look beyond just the generalistics of it's an exterior entry hotel, it's a Super 8 versus a Hampton Inn, it's good versus bad. They look the same, but they're truly, what you want to tell is the story of, hey, these may look the same, but they're truly different risks. So the more of that information you can put out in front of your underwriter, the more likely you are to get more favorable terms.
And any one of us will be glad to answer further questions. Come by the booths, use the information here to reach out to us. We would love to just answer questions to support you in any way. And I'll remind you that part of your AHOA membership, right, there's so many things that you can add to that story. If you've done the human trafficking and you've gotten the little certificate and your staff has done that, that's part of the story we want to take to that casualty underwriter. So as you're educating yourself and utilizing the benefits here of AHOA and back in your regions, use that as part of your story, because the more that you're engaged, the more that you show an underwriter and transparent conversation with your broker, the more that we're able to get out there and help you in a very, very tough market. So any final things? All right, we'll be outside if you need us. Also, please stop by any of the booths, and thank you so much for joining us today. Thank you.